Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to actually look at a lot of different factors to try and ascertain whether we're actually at the bottom. So I'm going to have a look at the Hikake pattern, which I went through last week over here, and see how far that's developed. But also I'm going to be looking at that channel on the BLX chart that I showed you many videos ago and see exactly where we've got to on this channel, which hasn't actually let us down over the last 12 years. I'll also have a look at the psychological factors that are weighing down on this market, and I'll just briefly go through the 60-day cycle and to see exactly which direction in the short term the market is going. So if that sounds interesting, then grab yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so this is exactly where we are. We're on the weekly chart looking at this Hikake pattern, which is a candlestick pattern of between 4 and 6 candles. And it's an extremely powerful candle, especially at the end of a very strong downward trend here. And as I mentioned in the last video, it's exactly the same pattern as was forming here. And that led to the relief rally over here of around about 40% from the bottom of this candle here. So if we zoom in to this part here, and the second candle is contained within the top and the bottom of this Marubozu candle, the third one has a lower high and a lower low. So that's the 3 candle pattern at the beginning it must have with those characteristics. Then the 4th, 5th or 6th candle, so the next 3 candles must break above this red indecision candle here. And the top of this candle is at 17,170. And as you can see with this current weekly candle, we tried to break the top of this. We protruded above it, but we've been rejected so far. If you see this green candle close this week on Sunday night above the 17,170, then it sets us up for this Hikake pattern to play up to the upside. And the next target will be at the bottoms of these wicks here, around the 18,200 to 18,500 level. We'll have to see for the next 2-3 weeks what happens here. I've not heard anybody talk about this pattern, generally because most people don't understand candlestick patterns. And this one is quite complicated because it actually involves between 4 and 6 candles with all the various characteristics that have to all align with each other. And so far they are aligning with each other, but we'll have to see. If we get rejected at the 17,170 level here, then obviously it's not going to play out and it invalidates this pattern here. And the danger is that we fall below the wick of this low point in the bear market at 15,400 here. So this is the range we've got now for the next few weeks and months within which we need to have clarification whether we're going to go the upside or to the downside. So this is the BLX chart on the weekly time frame. And as you can see, it encompasses all the tops of the peaks of the market since the last 12 years and also the bottoms. And currently, this is exactly where we're at now. But as you can see, it's very rarely gone below the support line except for the COVID situation over here. And currently, if we just zoom in a little bit, we can see that we've fallen foul of that over here. But we are making our way back towards the inside of the channel here. So we'll see how that goes. But if you look at the monthly chart, which gives you a bigger overall view, again, we're right at the bottom of that channel. But just like the COVID situation here, it may be that we have just one more leg down and create a wick over here before going up. Obviously anything can happen, but what I'm trying to do is to give an overall picture that certainly we are in a bottoming out phase and we shouldn't lose sight of that. Yes, we can go a little bit lower, but certainly in this range, we are in the bottoming out process if the previous cycles are to go by. And of course, if this cycle is very different, and in many ways it is, we have to explore the possibility of a super bear cycle, which may then lead to going very much further down to the downside. Only time will tell, but we need to keep our overall view and focus on exactly what's happening and where we are in relation to all the cycles in the past here. And we shouldn't lose sight of the fact that in between every halving, and these are the pink lines here that we do have after a bottoming out process where we come back to this support line, we do always have at least one, maybe 2 rallies before the halving here. So this is what happened before the first halving. We had 1, 2 rallies before we got to the halving. The second one, obviously, I've just shown you. The third one, we had one before the halving, and now it would be reasonable to expect at least one, if not two, rallies before we get there. The problem we've got is that the sentiment in the market is as low as you can ever get because of the FTX scandal, the Celsius, the Voyager. All of those situations have actually helped to lower the market to the bottom over here. And similar sentiment was over here in 2018 and back in 2014-15. And currently there is a bit of an overhang which should resolve itself in the next week or two about the Grayscale Bitcoin Trust, which may be liquidated. So while those factors are there, it is going to have a weighing down on the market until it's resolved. But once it's resolved and all these negative sentiments around the markets and the exchanges going bust, once that's out of the way, then I think we're quite clear that the investors will feel more confident to get back into the market. And the one worry that I do have is that this cycle has been quite unlike the previous cycles over here. In terms of there was no blow off top. Also, there were two tops rather than the one. The bottoming out process, according to all the averages which were relevant in the previous two cycles, have proved to be not as relevant in this cycle. And also the fact that in the previous two cycles, we didn't have the overhang of a worldwide recession in the background, which we have currently. And we didn't know how that's going to affect the markets, which obviously it has done, especially with the USA interest rates correlating very strongly with the market sentiment and bringing the markets down over here. So lots and lots of other factors as well, but certainly this cycle, from what I can see, has not played out according to and in relation to the other two cycles that we've had in the past. But we are where we are, and we just need to wait for time and for these things to process themselves through to see which way the whole thing will be clarified. So if we move on to the 60-day cycles, this is our low here when we bottomed out after the FTX scandal, and currently we're on day 23 with this candle here. So I've marked up here now that with the white dotted line, the mid-cycle of this current 60-day cycle. So from here to over here is 60 days, and this is the midpoint, the 30 days here. And that gives us a framework of what we can expect in terms of the price action. So up to yesterday, which is day 22 of this mid-cycle point. So if we have topped out here at the 17,300, then once again, we've topped out before the 30-day cycle midpoint, which means that we've got more days for it to go much further down over here into the end of the cycle low. But if that Hikake pattern is to play out in the next few weeks, it may well be that it pushes us past the midpoint of this cycle to, let's say, the 18,000, maybe even up to this level here at 21,000. If we can get up there, so if we can go past the mid-cycle point, which makes it a right translated cycle, i.e. past the halfway point. That means that the price has gone up from the bottom of the cycle for more than half of the 60-day cycle. We can then expect the market to then bottom out higher than the previous low here. And that would be very bullish, because every time we have these fallouts here, we have to have a period of consolidation before we start moving to the upside, especially at the end of a bear market. So the midpoint will give us some sort of a clue as to what it's going to do in the 60-day cycle low that we're going to be more than likely getting over here, just like this one over here. So if we have topped out over here, then the chances are we're going to come back down and possibly make one more flush down to the $12,000, $13,000 mark over here. But if we can get past the midpoint, i.e. past the 9th of December, we could very well follow this path. And that would be bullish. So let's wait and see what happens towards this midpoint in the next 10 days or so. And finally, we'll have a look at the current price action as it's happening on the daily chart. I've put the two markers here in red broken lines here at the 17,170 and the other one's at 16,800. So the 17,170, this red line here, is to do with that Hikake pattern. We need to get above and close above it for the Hikake pattern to play up to the upside. And that would take us past the midpoint of the 60-day cycle. But if we fall below the 16,800, if we fall below the 16,800, this is to do with the tops of these candles here. These are going to provide the support as we're coming down. And I've marked up the 61.8 level here, which is at around about 16.5 to 16.6 around here. That if we have topped out at these levels at 17.3, then the 61.8 will bring it down to these levels at 16.5 before we make another attempt at this trend line. This only has 2 points at the moment, so it's not very strong. We don't know how it's going to develop, and obviously we need to adjust it as the price action dictates that we do that. But I was watching the candlestick patterns as they were developing up here on the 4-hour chart, which was giving us a very strong clue of where the market was going to go at this point. So as we made our way up here on this rally that we've had so far, the things we need to look out for are inside bar candles, just like this one over here. When we came up so strongly, we had an inside bar candle, i.e. the tops and the bottom of this candle are contained within the top and the bottom of the previous candle. This is usually quite bearish, i.e. the momentum to the upside has now been stopped and people are not willing to pay higher than this price over here. So this candle tells us that that momentum to the upside is gone. And what we need to do always, whenever we see this kind of a pattern, i.e. an inside bar candle, so what I do when I see a pattern like this, I take a line at the top of this wick and another one at the bottom of this wick, and I wait for confirmation whether it's going to go past it or go below it. If we break above it, then the chances are we're going to make higher highs and higher lows here. But if we break below this, then the rallies come to an end and we're more than likely to go back down to the 50 or the 61.8 on the Fibonacci down here. Obviously we broke up to the upside and invalidated this pattern, but once again over here we got exactly the same. So you move the lines to the top and the bottom of this, i.e. over here, and at the bottom over here. But this time, as you can see, we've broken and closed below this indecision candle over here, which is an inside bar candle to this one over here on the left-hand side. But not only that, for those of you with a discerning eye will have noticed this red candle here. It's an outside bar candle. And at the top of a trend, this outside bar tends to be bearish, especially when it closes below the previous candles here. So as a result of that, it looks to me, based on the candlestick patterns, a higher degree of probability tells me that this is now on its way down to the 61.8 levels down here at 16.5. So only time will tell, but keep an eye on this. But as we've come down over here, we have created another inside bar candle to this candle and an outside bar candle to this candle. So once again, very interesting patterns developing, and currently we've got these two 4-hour candles now going to the upside. But I suspect, from what I've seen in the past, when you get this kind of a pattern just after a correction, we need to look out for the top of this outside bar candle here. So this red candle, the top of which was at 17,049, with a higher degree of probability that this little rally with these green candles coming up, I suspect it's not going to go past the 17,049 level here. So we're going to get this kind of a pattern on the way down. That's more likely than this rushing up here, but only time will tell. But these candlestick patterns that are developing are more on the bearish side than on the bullish side. And the reason why we got this green Marubozu candle over here was because on Wednesday, in one of the meetings, the Fed chairman, Jerome Powell, indicated that we are more likely to be less aggressive in the raising of the interest rates in the coming months. So while people were expecting that the interest rates were going to be rising by another 0.75%, i.e. 75 basis points in December, the heat out of that has been taken away by that interview with Jerome Powell, who's indicated that it's more likely to be a 50% basis points rather than 75 basis points. And that was the trigger for the market here. And once that news was out of the way, obviously the market seems to have topped out over here. So whether we get some other good news to push it back up here again, the chances are, with a high degree of probability, that we are now on our way to a correction down to these levels here. And we could obviously come down to this support line over here. We've already got 2 points on these levels here. So keep an eye on this support line. We may have a bounce around here and create a higher high from these points. Only time will tell. Okay, so we'll leave it there. Lots of things to consider. I know the market isn't doing what we all want it to do, but this is a period where we really have to grit our teeth and get through the pain of all the bad sentiment, all the bad negativity that's out there, and know that normally these are all characteristics of a bottoming out process. And those with a longer term view will find that these will be the times where you make most of the money by doing the opposite of what the herd is doing. As you know, a lot of the people have left this space, they've lost interest, they've made a lot of losses, they've capitulated out of the market, and that is also another sign that the market is about to bottom out or it's already bottomed out. You're the ones who will be rewarded for your patience. And if the past cycles are to go by, then you'll be well rewarded in this process. So all I would say is hang in there, don't lose hope, never ever lose hope, and there will be light at the end of the tunnel. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.